We're passionate believers in the long-term growth potential of UK's smaller companies. We run a highly diversified portfolio of between 140 and 180 stocks. At least 80% of the portfolio is invested in microcap companies, those with a stock market value of £500 million or less at time of purchase. These are small but very quickly growing companies we believe have excellent long-term growth prospects. My co-fund manager, Guy Feld, and I work with one of the largest and best resourced smaller companies teams in the UK. We have a watch list. This is ideas from the team and ideas from brokers, and then we conduct our own analysis. Prior to putting a position in the fund, we will meet the company management. What we're trying to do here is understand their business strategy and their vision for the business. These meetings are a critical component of what we do. We believe meeting the management and understanding their capability, assessing them, is an imperative part of the process. If we believe the opportunity is attractive, we'll then undertake a deep dive. This will include looking at the valuation, risk assessment, and then also try and understand upside versus downside. If we're satisfied the company has a high-quality management team, strong growth potential, and looks undervalued, it's likely we'll add that name to the portfolio. As you would imagine, we're constantly reviewing holdings and weighing up companies within the portfolio versus companies outside of the portfolio to try and allocate clients' capital best. Most of our portfolio is in smaller companies. There is a potential for stronger long-term growth, but share price moves can be sharper than larger counterparts. In terms of liquidity, it can be more difficult to sell because there are fewer buyers and sellers. But to help manage the risk, we hold a diversified portfolio of between 140 and 180 stocks. Finally, in terms of initial position sizes, we tend to never have more than 1% at initiation, but will happily increase that position over time if the management team is showing that they are executing on their strategy. While we're not an ESG-focused fund, we believe companies that take responsibilities for ESG seriously are the most likely to achieve strong long-term growth. Many of our companies are too small to have the ESG rating agencies score them, so we have devised proprietary ESG scores ourselves. We regularly meet with chair people to discuss questions or concerns on the ESG front that we may have. Historically, UK smaller companies have outperformed, although the share prices can fluctuate more sharply. For those with a greater risk tolerance and longer time horizon, we believe this fund deserves a place in a diversified portfolio, backing great UK companies with the potential to grow into giants of tomorrow on a global scale.